February 2025 started with a bang as President Donald Trump imposed trade tariffs towards both Canada, Mexico and China, and also hoovering around the same questions for UK and Europe. First trading day opened with falling stock markets, cryptocurrencies all over Europe. So I guess it's safe to say that we are in an interesting environment these days as we welcome you all to the first Nordic webinar from Intrum in 2025. And Morten Trusty, I guess especially for a guy like you, you have been glued to your phone the last days and weeks, updating yourself on these events.
Yeah, it's a lot to take in on a short period of time, and it's not good news for Nordic consumers or businesses, as we all have in common that we are small open economies. We are dependent on trade, both export and import, to maintain our standard of living. So worse condition for trade means worse condition for us in the Nordics.
Yeah, and for sure interesting days, and also interesting, I guess, for the development when it comes to credit services and debt collection. And you're going to take us through the numbers of all over the Nordics. So I leave it to you. It's all yours.
Thank you, Stian. Yes, good morning again. For the next 25 to 30 minutes, we will take a closer look at the debt collections data in the Nordics. But first, let's start with looking at the broader picture and the macro picture for 2024 and looking ahead to 2025. And while all the four Nordic countries moved along in the same direction for quite some time during and in the immediate aftermath after the pandemic, we now see much more differences between the separate Nordic countries, and we see that the cost of living crisis indeed created different challenges in the Nordic countries. So let's start with looking at the overall macro picture. And as I already mentioned, Nordic economies went their separate ways during 2024. And here you can see the real GDP numbers. And as been widely reported on, economic activity fell quite sharply at the start of the pandemic. Then we had a common recovery for the next 2.5 years. But during especially 2024, we see that the Nordic economies are moving in different direction, with Denmark and Norway performing considerably better than Sweden and Finland. And there are some industry-specific reasons for why that is the case. If we start with Norway, we know that we are a big energy exporter, and as energy prices are quite high, that boosts economic activity in all the economy as well, where in Denmark the pharma industry is performing well and are boosting GDP numbers. And on the counter side of that, the Finnish and Sweden economy is moving along sideways at best, and Finland is the GDP numbers are a little bit worse than they were a couple of years ago. So when looking at the economic data, the differences or gaps between the Nordic countries are beginning to appear. But we do have one thing in common, and that is that inflation numbers are again under control. We see now that inflation across the Nordic regions are close to the long-term target of a 2% annual growth in inflation. So inflation is back under control. But the differences start again when we look at the policy rates and interest rates. Norway is the standout country, which is only one of very few countries in the Western region that has yet to decrease their policy rates, whereas in the other Nordic countries, interest rates have started to move down quite a lot. And for Finland and Denmark, the interest rates are, of course, closely related to or directly related to the European Central Bank, whereas the Swedish Riksbank has lowered the interest rates 5 times in quite a short period of time. And that also reflects the different economic environment currently in the different Nordic countries. And GDP numbers can be somewhat abstract, but unemployment numbers are much easier to follow. So when we look at the unemployment rates in Finland and Sweden, they are moving up quite sharply and are close to 2 percentage points higher than they were 2 years ago. So unemployment are moving upwards in Finland and Sweden, whereas in Norway and Denmark, unemployment, at least during the second half of 2024, moved sideways. So that means that we have an income problem in Sweden and Finland that is not that has yet to appear in the Danish and Norwegian economy. And as we mentioned a few times, income is a much stronger correlated to payment problems compared to cost problems created by higher interest rates and inflation. If you lose your job, you have to adapt your economy on a short period of time to avoid getting into payment problems, and you are most likely been more credit active in the credit market during the last couple of years. So when we get to the debt collection numbers, please keep in mind the different development in the unemployment rates across the Nordic. And as inflation has gone down during 2024, savings has moved in the other direction, and there are some kind of structural differences that explain why the savings rates are higher in some countries than others in the Nordic. My point here is that during 2024, savings rate has moved up across the Nordic region, and that means that when your wages are starting to grow faster than inflation, as was the case during 2024, what do you use that extra money for? Do you use it to spend or do you use it to save? And across the Nordic region, and this is savings in percent of income, we see that the marginal propensity to save has increased during 2024, which means that if I do get some extra income, I'm more likely to put it into savings because I live in an uncertain world and I want to be prepared for the next economic or private economic crisis if it hits. So to sum up the Nordic region as we enter 2025, inflation is back under control all around. Interest cuts are underway with Norway currently as the only exception. It has to be said that it's widely expected that it will be put down, or the interest rate will be decreased in March, but yet to happen. And we also see that the Norwegian and Danish economies are outperforming Sweden and Finland. And more specifically, we see that translate into the labor markets and unemployment numbers, where unemployment are increasing in Finland and Sweden, but only marginal changes in the Danish and Norwegian labor market. And as you know, unemployment, key driver to credit defaults. So let's keep that in mind as we take a closer look at the debt collection numbers. And not a great surprise that the collection numbers do reflect on the overall economic performance. So let's start with Sweden. One other factor other than higher unemployment is consumer credit lending growth, which has been quite fresh during the last couple of years. So if we start by looking at the credit growth and different kinds of credit, none the least, first of all, as expected, mortgage lending fell as the price on a mortgage loan increased. Not a surprise there. But if we see on the credit card lending, we see it hovers between 5 and 10% annual growth, has come somewhat down, But make no mistakes, credit card lending during the last couple of years has been quite positive. Looking at the consumer loans, still, or even on consumer lending, it's a downwards trend, but still positive numbers, which again means that there's a lot of newly issued unsecured debt in the Swedish market. And when you combine that with higher unemployment rates, one would expect to see higher defaults as well. And that is indeed the case when we look at our debt collection numbers. If we concentrate on the 2024 numbers, we see that from during the last year, we had an 11% increase in number of debt collection cases, but the increase in defaulted amounts was up by 16%. So there is, and that growth is on the back of strong growth even in 2023. So the momentum in the Swedish debt collection market is certainly growing. And when we look at what types of claims are driving the credit defaults or the debt collection numbers, well, it's quite clear it's driven by banking claims. So here are the amounts to collection divided into credit cards, consumer loans, which is the purple ones, and car loans, which is the dark green here. And as you can see, if we compared the amounts that are defaulted to the start of 2022, so when the cost of living crisis sort of kicked off, we see that the level of amounts that are defaulted are almost twice as high as they were a couple of years ago. So, and on the back of all those numbers, it's not that surprising that interest rates are cut, and that will also give some relief as the price on the loans that are defaulted are directly correlated to the interest rates. So that should get the numbers down, all else equal, during 2025. Looking at Norway, or moving on to Norway, we see a different picture in the Norwegian debt collection data. We have growth in Norway as well, and in 2024, number of debt collection cases increased year on year for the first time since 2019. And we also see that the principal amounts are growing a little bit faster than the number of claims. But when we look at the what type of claims are going to collection, there is a stark contrast to the Swedish market. In Sweden, banking claims are the main issue. In Norway, small ticket items such as phone bills, electricity bills, public fees, etc., etc., all those types of small recurrent bills are at an increasing pace going to collection, whereas banking claims fell quite steep during the pandemic and are currently nowhere near their pre-pandemic levels. We did see an increase in housing loans to collection, but as the interest rates started to, or hike in interest rates stopped, we saw after 6 months that housing loans to collection were under control as well, and that is also helped by higher real estate prices, which again means that loan to value are increasing and refinancing can be made more available for those who struggle to pay their mortgage on time. Moving on to Finland, we see that the lower interest rates are indeed very welcome there. If we start by looking at the NPL data in up to day 90 and between day 90 and half a year, we see that overall the annual growth has picked up at the same time as interest rates started to increase. So there's much more default, or the number of defaults are growing quite fast in the Finnish market. And although the unlikely to pay or not past 90 days has slowed down somewhat, it's still a 10% annual growth in the NPL ratio among households. And as NPL ratios increases, we should expect to see the same in the debt collection market as well. And indeed, that is again the case. Looking at the 2024 numbers, we had an 8% increase in the number of debt collection claims and almost a 40% increase in the principal amount, which again corresponds to the high value credit or high ticket credit are the ones that the Finnish household are currently struggling with. And those credits are priced by the interest rates. So lower interest rates should help during 2024 and hopefully bring down the debt collection growth somewhat. And it's not necessarily that many that are struggling to pay their bills and loans, and particularly loans sometimes, but those who do have quite a high amount attached to their debt that they are defaulting on. Moving on to the Danish consumers, we see that a strong labor market and quite slow lending growth, at least compared to the other Nordic countries, indeed failed to create much payment problems. And if you start by looking at the lending growth, we see it's hovering close to 0%. And if you take into account the inflation that we had over that period as well, in real terms, the debt exposure on Danish household are declining. And if you combine that with the low unemployment growth and high GDP numbers, one would expect the debt collection data to be quite modest as well. And indeed, that is the case. We see that the number of debt collection cases during 2024 fell in Denmark, which was the only country that happened. But if we see at the principal amounts and the sum of the principal amounts, we see that the amounts are growing in Denmark as well. It would be, even though the economy is performing well, labor market is performing well, it would be a surprise given the period of inflation that is behind us and the higher interest rates that amounts did not increase. And that is indeed the case in Denmark, but not a real cause for alarm. So let's then move on to the business sector, and we do see a steady inflow in debt collection on the business side, but not really at an alarming pace. So if you start by looking at the annual bankruptcy numbers for the last 6 years, first of all, they do kind of jump around somewhat, but there are some overall trends. So first of all, during 2020 and 2021, we see that the number of bankruptcy declined as public insurance, although the insurance policy took on different shapes and forms. Public sector, by large, guaranteed your private business, and when that is the case, you would expect to see fewer bankruptcies. Then, as the economy returned to running like it normally does, insurance policies were removed, which again created an increase in bankruptcy data in 2023 and 2022. But then in 2024, that effect has sort of fizzled out. So again, we are in a state where bankruptcy data are driven by economic performance. And then there's no surprise that the bankruptcy data in in Sweden are the ones growing at the highest pace, and in Denmark are the more positive picture. So when we look at the amounts to collection during 2024 and compare them to 2023, we see that the amounts to collection increased all the way across the Nordic region. And again, it's not an alarming pace. And again, those numbers has to be seen with the past inflation numbers in the Nordics, and we know that the inflation hits the credit default or the debt collection numbers at a later time. So those numbers are more easily explained through the past inflation than to current economic problems. And when we look at the number of debt collection cases during the last 2 years, it's overall growing, but not necessarily at an alarming pace. I do want to single out in Sweden, on the back of a strong growth in 2023, that growth continued in 2024, even though it slowed down somewhat. So it's even though debt collection numbers are growing, it's not that much of a concern with Sweden as a notable exception. So let's finalize by taking a look at a short summary and outlook. Sweden and Finland really are the two standout countries when it comes to late consumer payments, and it's caused by a combination of lending growth, higher interest rates, and higher unemployment. Now, interest rates are currently moving down, and they're moving down quite fast. So it will be less of an issue in 2025 than it was in 2024. But unemployment and payment problem caused by unemployment tends to be sticky, as it will take some time, even if the Swedish and Finnish economy would start to move upwards again in 2025. Most would like to see those numbers move up quite a bit before you start hiring again. So late payment problems caused by unemployment tend to be more sticky, all else equal. Looking at the Norwegian market, as the cost of living crisis fades, we do expect the increase in payment problems, as we saw during 2024, to fade somewhat in 2025 in Norway as well. Moving on to Denmark, then Danish consumers looks quite solid. Strong labor market, slow credit growth, and overall growing economy. So when we look at the bankruptcy data, normalization is the keyword there, and with Sweden as a notable exception, which saw bankruptcy and debt collection numbers moving at a faster pace than elsewhere in the Nordics. And to sum up or look ahead in 2025, it looks to be quite a bumpy ride. The trade war is underway, as Stian mentioned earlier today. Even though the Nordics do not trade that much directly with the American economy, the side effects of that trade war is likely to hit us during 2025, and slower trade for small open economies like the ones we are living in will affect all of us to a certain degree. So that was all for me this time around, Stian.
Thank you so much, Morten, for a solid update. Remember, you can always find the latest news on our .com pages and, of course, on your local Intrum webpage. Thank you for watching. Have a nice day.